do this thing. Why is this even on? Huh. Yeah, I don't want that on. You just quit it. Oh my goodness. Just go away. Golly. Alright, let's try this today. Okay, kind of a red day in the market. I'm really interested in UNH. That's just crazy to me. Who? Oh, I wasn't talking to you. TD's view. All right. Kind of gonna steer away from analysts for now. I'm gonna steer away a little bit from AMC today. So I did a lot on AMC yesterday, kind of absorbed the whole stream. So I'm gonna try to steer away from that. I'm actually really interested in UNH. So this is United Healthcare. I'm not a big fan. This is the health insurance that we get through my wife's work. And I don't personally like it very much, but, you know, they've had some pretty huge ups and downs. And I'm not sure how much of that is warranted, but big part of it was their CEO like exiting, and they got another guy on board. And yeah, so I'm kind of curious to see where this is going to go. It's got an earnings coming up, and it's down really far. I mean, it dropped like 40% on the year. And it's way oversold. Now, that doesn't mean that it's necessarily going to have some kind of a massive, immediate comeback. I think that would be a bit silly. But with earnings is the possibility of catalysts. Long term, this might be a difficult one to trade for some because it's still pretty expensive. It's $293, so it's not the cheapest stock in the market. And I'm pretty sure that the options chain is probably only going to be affordable if you're doing like short-term contracts. So there's a bit of a mixed bag that I have here in regards to maybe what to expect. I'm trying my best to be a little bit optimistic though, because there's a lot we could kind of look at. We haven't really looked at it very much. And just the fact that it's so ridiculously oversold doesn't mean it's necessarily going to bounce hard. But this is kind of a correction that's been a long time coming. So, hey, good afternoon. So there was a long-term divergence that started, you can see way back here. And this was in 2018. So I'm going to mark off that area. Yeah, that's not good. I was wondering if that was the weakness that we were looking at. And I think that is it right there. So there's a couple spots that I'm like, oh, this might not be over yet. That might be the spot right there. What I want to do is see if there's a reason beyond maybe what you're seeing here. Because obviously, long term, this weakness was then met by a push up that goes into distributive phase. And again, this is a really long-term motion, but you can tell that there, and it's not always like the cat ear kind of idea isn't always super obvious, but that two top kind of motion is very typically associated with some kind of a correction, and it does still look like little kitty cat ears. Whether it's super severe, like this one was back in 2008, which probably, again, financial crisis, versus something more benign like the 1998 one, which is still a big correction. I mean, this is the kind of thing that we're looking at now saying, is it going to continue to grow exponentially? You know, and you might say, not exponentially, but consistently. So you might say, like, again, it's not the best buy right now, but even if it comes back to make all-time highs, it's like 200%. There were under investigation for some other things as well. My goal here isn't really to overanalyze it. I think we're going to get to a point where we can kind of draw a conclusion. But I wanted to see if it's a good buy going into earnings. Earnings is coming up within a few days, so it's like right here. And there was someone in the Discord group had said, like, well, I don't really see a lot of good setups. And I was like, well, on the one hand, I kind of agree. There's certainly some, this is kind of shaky. Fang looks kind of shaky to me. AMC looks really shaky to me. Like, everything looks like it's in a position where, yeah, it could go up a little bit, but you're really ready to just kind of rug pull the market. But then there's others that, like Apple, to me, is a good one. UNH, Google, and I mark these off in the topics here because all of them are basically like lagging, like they're behind the market recovery. Even GME looks shaky. Well, yeah, I mean, the threat of 17 is very real. We talked about that yesterday. Even in the midst of coming to the upside here, like unless you find support up here above 26 over that creek again, any kind of a pump here could be very devastating if it meets with a sell-off. It's not complex. Now, right now, there's a bit of a change of character in that it didn't make a lower low as opposed to last time. And it hasn't broken through, as far as I can tell, hasn't broken through that second ice layer. This is certainly a possibility. It's fine. But I also wouldn't put it past them to just do an upthrust right here to like 26 to 28 and then drop it again. And 17 is a very real target. We've talked about 17 since forever. I mean, we were talking about that back here when people said it was going to drop to 17, and I said I didn't think it was going to at this time, and that was correct. But then later I agreed that is where it looks like it was going on a downward curve. I mean, it's not complicated. So I'm really, again, trying to see if like I can see a really strong pattern here. The market always has these funny like news headlines and stuff. When things like this happen, it's surely it's always possible that a company goes out of business, right? It's always possible that this is the time that it doesn't, have a correction, that this is the time that it doesn't do that. But they reinstated the CEO who had previously like retired from the position, who did a very good job in obviously leading them to profitability. I don't see it as it's going to just go belly up. And so when I look at this right now, I would probably describe this best as just sort of a loss of the main trend. And I don't think that there's much controversy here in just drawing a line. Clearly this is bending down, and this weakness then becomes more than just a weakness on a range. It becomes a weakness on a trend, and that was again from back here in 2020. So the COVID drop shows a bit of a chink in the armor from a technical standpoint. But I really want to see is if there's any kind of an obvious pattern with divergence, and I'm starting to see that there might be. This one's a little different because there is not much of a divergence, but it's like the extremity of the strength index moves versus like the movement here, this is still downward. I don't see a higher high there in the 2008 crisis. So this is not considered divergent. But if you look at those bottoms, like it bottomed out like hardcore. And it also had dropped what appeared to be like the rising trend there. So there was a lot of similarity in sort of the nature of the drop, but I wouldn't call that a divergent. This one might be, though, more so a good example, because this actually looks like very, very similar. Going back to maybe 1992 even, you can see the RSI is really struggling. It never makes a higher high, not really. Like this is kind of the place where you see an expansion, but it's making lower lows. So there's this widening downward motion here. And the price is going up, like it keeps going up. And that correction, when it finally catches up to the market, is extremely volatile. So this is actually where it peaks. And while that's going on, of course, it's bottoming out. Now, that gives you a sense that that shakeout, much like here, there's kind of a double bottom. 1, 2, 1, pump up, 2. These are really similar, too. These two particular drops, albeit the second one here is ridiculously high. There's a lot of similarity there in those two motions. So let's take a look. But I mean, this is like a potentially really good play. I mean, you've got if this goes back to all-time highs and keeps going, you've got over 200% on the table here, like easy. So I expect that a lot of people don't want to play, a healthcare company, or they can't afford it, or they only want to, do AMC GME stuff. But to me, it's like, if you're looking for a good play in the market, look at the ones that are like deep in the red right now. Why are they doing that? Is there a possibility of recovery? How did they recover in the past? How long does it take? What might happen in the near future? This sell-off is astronomically high, and it really only compares to maybe, again, 2000, this leading up to the year 2000, 1996 to 1998. Even here, there's probably more volume in this 2008 sell-off over time, but that singular spike is really what stands out to me. So anyways, in both of these cases, they had double bottom sell-offs, but in both cases, they actually came back up again, which is interesting because I'm not seeing that here. I'm seeing like this is the initial push. I don't know if you guys can tell. This is kind of different. So my first thought from an RSI perspective is like, well, it should just have a double bottom. It probably needs it. But then I'm looking at this and I'm like, no, those double bottoms, they came off of the double tops. So you can see in the past, like these had one and then it hit oversold and then it came all the way back up and then it did it again. And then you get kind of a consolidation and a takeoff. At first glance, this looks different, but I think it's the same thing because you get oversold, comes up, gets oversold again, and then again it comes out, consolidates, and then takes off. Actually very, very similar, except for, of course, this has this massive dump. That's humongous. And then the other problem is like, where is the low? Like, what's the target low here? And that's a big question. That's the question that really you want to know, because if you were going to invest in this short or long term, you'd want to know, like, is there a targeted low? And have we already gotten there? And if you haven't already gotten there, then this is not a good buy yet. But again, this has an earnings coming up in a couple days. It's already oversold. So here's the difference, I suppose, is like, if I look at that pattern and I say, well, where did the top begin? You probably would say it was here. I don't see how that wouldn't be very controversial. I would think that makes sense. I mean, it's entirely possible that this is like number one and it's going to buy back up and then have like a number two, and have like this longer winded recovery for 10 years or something ridiculous. But that would be saying that again, like that was the first peak and then it dropped, but I don't think so, because this looks like it ranged out just like it had in the past. It had already broken down out of the trend. So these guys also, they mark trend corrections, like you're leaving the trend behind right here. So consistently, once it leaves the trend behind and you go into like a sideways period, that would be the best way to describe this. Now, this biggest problem with this one is it seems to be leaving like the most macro trend. But then again, you know, back in the day, would we have said that, and this is a question in my mind I always think about, is like, would we have said that this was the trend? Probably not. I think if you had drawn this a little more accurately, you might have said this is when that happened right here, which was 2008. Perhaps that was the big trend going up, and then it corrected and kind of flattened out. So I'm calling it the macro trend right now, but maybe back in 1988 up to 2008, that's a long time, 30 years or whatever that is. That's a long time. 30 years? No, 20 years, whatever. Yeah, 20 years. Do the math, Booksy. That's a long time. It was a 20-year trend that broke, and it didn't ever recover. It never came back to that trend again. It just assumed a lower trend. So I guess what I'm trying to say is it's not like a perfect puzzle just yet, but I'm just trying to get a feel for the chart. So it looks like once it tops off, there's a corrective phase of some kind. That's what we're doing right here. So I'm looking at the RSI like, well, previously they had a double bottom, but these were big reactions up, and the hook very obviously is this hard spike before the final drop. It actually looks exactly the same here, this one, and then this one right there. And I'm not seeing anything that looks just like that yet. Then again, these are humongous moves on their history-making moves, really. These would have been the biggest sell-off points that you could have possibly bought at. Because every other time, maybe except for the beginning, every other time this is just in an uptrend. And then it has a correction, uptrend, correction, uptrend, correction. So now the question is, where is it going? Why? That's an old school cross. But it might be the one. This is tricky. I'm kind of ignoring that push, but trying to decide based on where that previous support and resistance were. So there was resistance here, it broke out, and then it found support. That's a long-term trend. That seems really unrealistic. It can come down to like $30. Then let's take a look at, we'll have to go back into short term, really check it out. I want to see if we can figure it out. That one's ridiculously low. There's another one right here. That seems to also have been met. That's kind of spooky, isn't it? Is it, Booksy? Kind of. It has all the markings of a pivot, which is weird. I mean, that's strange to me. I define pivots as like intersections like this where it's not always necessarily that it's exactly the high or the low, but it's often like a turning point. Sometimes it's the opposite. That one's curious to me. And let's take a look at this weakness. And I want to see about this double bottom. So it hits a low here. It's really more of a divergence, almost like a hidden divergence of sorts. There's a bit of a widening on the spread. Honestly, it looks like the spread widens from here out. Right when that breakout happens. That's important. That could be a price target, and probably is the main upper price target right here. It's a consolidation with a distribution. So they're distributing around a specific level, and it's like probably this 500 mark. I'm going to guess that it's fairly straightforward. It's probably 500 since that's where it looks like. No, we're not going to cheapen it. Let's make it really as close as we can get it. I think it's 490. Yeah, so unlike previous times, this hasn't become oversold twice, but it got pretty darn close. It did something similar back here, but it did it on a like a downward trajectory. So you can see like there was consistently pushes down here. I don't know why that's dotted still. Need to change that. Actually, let's use that fat arrow one. Oh no, he said it's a big boned arrow. If it makes you uncomfortable. Arrow marker here. That way. You see these like push downs. Oh, come on. It's kind of the opposite of what I wonder why it's doing that. Oh gosh. Wonderful Booksy. It looks like it started pretty early. Looks like there's 1, 2, 3. So there's 3 pushes lower because this one starts higher. 1, 2, 3. And then this is basically the opposite. 1, 2, 3. Where they're starting to try to advance the other way. It's interesting how that works, isn't it? And it fails. So this is a huge range down to 200. We're definitely closer to 200, I think. I mean, you're at 292 than you are to 490. That's 200 away. That's only 90 away. But does it run the risk of maybe another low? That's the big question. And then where would it go after? Let's take a look. One of the other things that happened in the last time, well, not 2008. That's not going to work. That one doesn't have any kind of pattern on the bottom. I can't tell anyways. This one has a pretty clear trend though. It's like a widening. So there was a sense of kind of a double bottom on the RSI, and it's going back up to the top of this widening while the price was kind of coming down into its bottom. Again, that may not have happened yet. Here, we may have to have some kind of double bottom. But I'm really just saying if there's going to thinking about a reaction right now. So let's take a look. So we've got pretty clear and evident widening going on around 490. Yeah, it looks like that was established as like the trend breaker. It did become oversold. It's actually going back into oversold. This is the weekly time frame. So it's remaining oversold for quite a while. So this is a bit different than the previous times, unless you count 2008. These like spike down and then just go right back out. Yep. 2008 is the only time it like lingered. And this is actually lingering on top of oversold. And we've got this massive drop. That's a good thing though, because you got to understand, like, while that may have been largely just actual selling, if that's short pressure, it's going to be covered. It's like anything we do. It's all the same. So what I'm going to do now is take a look at where this sign of weakness was pointing, see how severe that was. And then we'll come back and we'll look at the short term. I just need a big picture. I've looked at UNH a couple times, thinking about it. I think I played like one day or something. I just played like a day, and I made money on it. I made money on this bounce up, and then I haven't touched it. I actually think I bought around this 250 area, and then I got out at like 300. Again, I just played it for that one day, just to see if I could make some money on the rebound, and I did. It's just an auto reaction play. So this is pretty similar right here. You have like a consolidated motion around 240. Yeah, right around 242, and that is where it went to. So I'm gonna throw it out there and say that I don't necessarily think it's gonna go down to 200. I think that 242, that center mark on liquidity, is probably gonna be your best bet. And let's look at VRVP. Oh yeah, huge amount of shelf right there, right at 245. Huge shelf. So we're just dipping back into the liquidity that began really when this COVID crisis hit. So COVID is a chink in the armor, so it's important just to remember, like, it's possible it goes lower, but at least for now, I think that's probably all that's in view. I don't think there's going to be more downside unless something worse happens to them, news-wise or fundamental-wise. And then this also, interestingly, this is a very interesting one. This line right here. This is support, resistance, trying to push it, push it, push it. Support, go right there. I keep using these like thin ones. I like the big arrow markers for certain things. I don't use them enough. This is a good place to use them though. Those two markers are very important to the overall picture here. Yeah, and then it does it again on the way out. You can see that it was hit, and then that's like the place that you sort of fall off the cliff. Yonder, right there. So this mark at, and maybe that was obvious because you're probably looking back saying, well, that's the floor, at 440 or 445. Yeah, I mean, that's, again, liquidity is just looking at where those places are stopping. But I'm trying to get an idea of like the most likely targets. That's probably now the upper one. And then this is probably now the lower one. Even though, yeah, you have, tops and bottom levels here, and the middle level here, that squishy middle, those are two really obvious marks. So clearly right where we are, and then I think down to 250 as the lowest. That's really where it becomes oversold though, isn't it? It's like if it drops back down again, it's going to be right back into oversold territory. So pretty much everything from 300 down to 250 is a highly likely buy, because it doesn't seem like it's going to linger there very long. Even if it has another drop, I think that would be pretty unlikely. There's too much money in this play. I don't think that the market would let it sit there. And then we can look back at the divergence and also suggest that that makes the most sense because that's where the divergence started. So I guess when I wanted to answer, the first question I really wanted to answer is this big question: what's the target low? And I actually think that it probably already hit, or it's very, very close. That's a good sign, because like, you don't want to buy into something that, yeah, maybe it has 200% upside, but it's still going to drop another 50% or something ridiculous. I don't think so. That divergence is met here. And if at worst, I think you could argue that it would be kind of bad if this had an auto reaction and then came lower. But I think at worst, you could maybe say that this drops stack down there. And then you'd have to kind of just weigh it. We don't know yet. But now I've got a pretty good idea. And then in the past, there have been macro double bottom RSIs, but this is pretty unique. It's kind of lingering on top. And we haven't really seen any kind of firm double bottom. This is pretty close. And in the past, again, it really usually went from that first drop to the last. So there's like an M top here. But in this case, it didn't really do that. So there is like a repeated push down. It's almost a triple push down instead of two, and the first two don't actually go into oversold territory on the weekly anyways. Let's go to like the 4 hour now. Let's skip the daily. So I've got some pretty good historical context now on like what this has traded like in the past, where the investors maybe stepped in. We now know where the liquidity levels are, which is up ahead at 445 and down below at 245. There's clearly a lot of buying that's happening. It's mostly buying is what it looks like. But now we're going to get that pre-sell-off. Earnings is on the 29th. It's coming up really soon. All of it down here is selling. Sell, 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 sell. From 250 up to 263, which is interesting. At least downward motion. Not necessarily all selling, but clearly. I think we're just looking for that rebound. Now we're just looking for that higher low. Once it gets that higher low, this should be in a pretty good spot. And it's probably going to try to make a low, lower low, just in terms of like bears trying to make a lower low. It usually happens. So let me see. It looks more like a curve to me. So it's going to be hard to maybe draw like a straight line here, but I'm going to try anyways. I'm not sure it's going to work out. That's what I'm trying to say. Yeah. I'm not so sure that's actually the trend. This is a tricky one. So when things go parabolic, I've done the beak before. What I don't usually do is like the inverted beak, because first of all, the beak is kind of garbage. Like, it's a fun one to draw, don't get me wrong, but it's very much like up to the discretion of the person who draws it, and that makes it kind of unreliable. This is not even a great example, but like a beak would be where it's like widening and then it's narrowing. The reason that I draw it though is because it does work. It's the exact same as a wedge, and I've done it more than once, and I know that this is true. Like, I wish I had like cataloged them. And, you know, if I could go back 3 years ago, I should have started like a catalog of every single beak formation or every single this formation or that formation. That's what a good statistician would do. I didn't do that. So you have to do this kind of like trust me bro kind of thing, which I don't like, and you don't like it either. But whenever I see a beak, which is like this widening, there's this rule that I found that works really well. So just like when you have like a narrowing wedge, there's like a poor man's way to do a narrowing wedge, right? I don't know if you guys have ever done this, but like if you have like a narrowing wedge, right, and it hits 3 times on one direction, usually that third time, the fourth time it breaks out. People kind of know that rule. That's a pretty good rule. But the wedge tends to be very like specific in terms of its direction. The better the wedge, the more like consistent it is with trends and all that stuff. A loose wedge tends to not have as good of a breakout. And then one of the other rules is like a 60% rule. Like, it's stronger if it breaks to the upside after 60% than before it finishes the fold formation. If it goes all the way down the formation, it's a pretty crappy wedge. Something else usually going on. But one of the ways that you can do this measurement, and I kind of did this backwards because I have 3 hits on the top instead of on the bottom, but it's fine. One of the ways you can do this, and I call it like the poor man's way, is to measure the initial height and use that as your breakout target. And it tends to work pretty well because of the way that wedges reduce by a certain percentage over time. I don't know exactly why that phenomenon happens, but if you look at the actual like Bolkowski way, I believe it's either 60% or 30%, but basically what you would do is you would take like a 60% of that wedge top to bottom distance and add it to the breakout value. It usually ends up being, and I don't know, I didn't do this on purpose to make it perfect, but it usually ends up being basically the same value as the initial height. This was something that I discovered when I found that there was another pattern that Bolkowski talks about, which was and I'm sure there's other people that do it, but which was the sideways triangle, because they talk about the measurement of the height there, But the measurement of the height on a sideways breakout is always going to be the initial motion. So if it's like a perfect, they call it like a symmetrical flag breakout like that, which doesn't happen as often as we would hope in the market, unfortunately. It's always like the top to bottom height added to the breakout, but that's always going to be this height, right? Which again is the same way I measured this one, except it goes down. So it's kind of a mix of the two. Anyways, so here's what I found, okay? So that's just some background as to why I would even think about doing this. When I started seeing like these beak formations on AMC, they usually accompanied a like an S-curve. So you'd have like the beginning of an S-curve, and this would be like the back side of the S-curve or the bottom. And this would even become its own S-curve, yada, yada, yada. We could look at all that stuff in conjunction with this, but I'm not going to do that right now. I'm just going to talk about this. And what I found is that it is a pretty decent rule. So it works all the same or very similarly. It's not always perfect. This later led me to find that the drop-in value also plays an important role in the reaction value. So this is kind of a curiosity that I have, because what I found is that when it breaks out, a lot of times what happens is that it actually breaks out. If it breaks out early, like so, then the bottom value ends up being like a 50% marker, and this is like the range that is then assumed. Why would that work mathematically, you think? You know, I think in my brain, it's probably because, again, the ammunition, like cause and effect, like what's being built up here is then being used and transferred. And if I think about it as like the transfer of trading ranges, like I want to move from this range to this range, this might make sense. What also works here oftentimes is that when it finally does break out, it kind of reforms. So it looks like a wedge and it's going really parabolic. And then it reforms when it breaks the side of the wedge, it reforms as a kind of channel instead, since that makes sense. So I look at that and I'm like, yeah, there's some consistency there, because you see the same thing with wedge breakouts. They do the same thing. The challenge is always like finding that marker and then sort of determining if it's going to drop low again versus just kind of react and go back up. The first time I successfully did this measurement and used it to trade was a 40% move in about May of 2022. There was a huge reaction off of an S-curve bottom, and I predicted that it would run about 35 to 40%. I think it ran like 42% or something because of the top, the way that it had built out. Here's where this is where things are going to kind of like go off the rails a little bit, because I see the same thing here, but it's a widening. And it's kind of backwards. And I don't know exactly how to make heads or tails of this, but I'm wondering, because if that rule applies for wedge narrowing, I'm wondering if it also would apply to widening, which would put it in the same bracket as a widening downward channel. If a widening downward channel broke out, if the spread was widening and it was going in a more consistent pattern and it broke out, the top of the widening, or the bottom if it's going up, would be the target, which actually is sensible here, because there's this gap that was left right on the top of the widening. Now that's the easiest way to do that. The reason I brought up all the other stuff though is because technically this isn't like a traditional widening. It's just not. If you were to call it that, you'd be like, there's no way to draw it. You know, there's no line. The line actually looks like it's going up. Instead, it looks like it's an arc. So it's almost like an inverted beak formation. So there's nothing about this that's going to be particularly provable on my standpoint, because this is not a traditional widening. Aside from saying it's going to fill the gap, well, maybe, you know. A widening would also give you trajectory, because every widening has like a trajectory in, you'd have a trajectory out. This one is going to be a bit tricky. What we may have to do, see, I started trying to draw this trend, and I'm like, there's no trend here, because it just keeps accelerating. So every other one of these is going to be like less and less and less severe. That's not going to help you. It's clearly parabolic in nature. There might be like a cross here, and I think that's probable. Again, that's just more of like a wave jump, and that might help us a little bit. And then it looks like the last one has already been met, which was this guy, and that was already a hook there. That was the trend upward. Yeah, support, 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 and then it drops, and then resistance. So this isn't much help either. This doesn't give us direction forward. So we've already got what we think is a pretty good correction. It could come down low again. Earnings is around the corner. It's possible it comes down to like 250, maybe even a little bit lower. It could make a lower low. But if it makes a higher low, this is pretty bullish. There's not a great channel down as far as I can tell. This one already is broken. So, I mean, there's nothing else there. And then the only other thing I could look at is like, let's ignore the upthrust and just see where that was going. It looks like there was resistance here. So that might be a really relevant creek. My guess is that this is establishing like a sideways action here. And that's the reason it dropped so low so fast in some ways, is that the market wants to trade it again. And this is like the time it takes. So this goes pretty far. And again, this is completely and totally depending on how you draw the curve. But it looks like November, for Pete's sake, which is really far. So we might need to try a more mathematical approach and see if we can figure out if there's like a better way to actually draw this. That's not just me doodling it. Why would this be necessary? Well, on the one hand, if there's a true widening of the spread, and it looks like it's there on the RSI, so I mean, it's not really a big leap to suggest that it's there. It looks like it's there on RSI. If there's truly a widening of the spread, then it does give you an inevitable target. It also gives you a sense of perhaps how fast you go back up to that target. There's two trajectories here of interest. One is this one, which comes down very rapidly. That one's super fast. That's a very high speed exit if it uses that. The other one's probably back here, which is actually the high. Looks like the all-time high. Yeah, and that's here. So that's quite different. And that's where it shows some serious weakness because it dropped down really low. It lost its trend completely, that trend we were talking about right here. So both of those are pretty good trajectories that might be used. So that's 57 degrees. Again, as we look at this, I have to just do it from the bottom now, but it could move. So 57.4, very simple way of doing things, not necessarily the most accurate, especially this one. It's going to be pretty controversial probably. 83, it's going to look really, really, really fast. Not surprisingly, though, that's the trajectory on the bounce. So usually that very first reaction, the auto reaction, it did follow out that way. But I'm very doubtful the rest of it does. This seems more realistic to me. So this gives us a triangulation possibility, and it does look like it's pretty far out there. It looks like November. Well, that's consistent with what we're seeing here, which is if we look at that liquidity shelf level right around November 6th, we might be able to use that. So let's take a measurement. It's going to be a bit of a hack job. But let's take a measurement to November 6th. And then again, I'm going to try to use a little bit more like precision with it. So we know where these came from. I'm going to delete them so I can see better. We know this is a potential major retracement level. And then we also know that the widening here might actually provide, again, some resistance. And it kind of looks like this is now splitting the difference between the two, doesn't it? That level at 4. So like over here, you can see it's like directly in the middle. This feels right to me. All right, one more thing. Well, two more things, and then I'm going to probably wrap this up and move on to something else. So I'm not going to use that little extension. I'm going to use the cat ear line. We talk about that frequently here. That's the repetition of like, where is the wall, right? There's clearly a directing of the stock price here when this fell out. So it hit all-time highs right here. It drops, has a weakness, and then there's this really strong like quadruple hit here with an upthrust. We could use the upthrust, but this is the one that's used more often. And then here, this is very, very, very steep, but it's the same thing. As a push up, it breaks the trend, and then it has a hook. This one's probably a little bit trickier because there's more noise. We have to go down small, but I'm going to look at both of those. This is very relevant. This proved to be correct. There's the gap off of it right there. So this one is definitely being used for sure. That gap is not a coincidence. It is exactly off of that marker here. This was the resistance and it's trying to get back above it here. It pushes, drops low, gaps above, then it drops all the way back through it. So that one's pretty critical. This one has yet to be used, but I'm starting to look at this like that could be that middle. This actually seems pretty likely that that's more or less like the middle of the range. What do we normally see on bottoms? Well, we talk about M's all the time on here, but we usually see something like that. I mean, if I were to make a guess about what this would look like long term, my first guess is usually like this, because this is more typically like what you see. If it's going to accumulate and if it's strong, that will be sort of like the accumulation pattern, wave up, down kind of business. With this being a bit higher and then retracing, this being a bit lower where it is right now is probably fine. It doesn't quite look like that here, so don't get me wrong. I'm not trying to like tell you that's what it is. It doesn't quite look like that to me. I can see the double top here, but it's like a widening top on the RSI. And it looks like we might have our answer pretty soon, because to me this looks like this is already almost done. So it's going to come back to this 4 hour. I think it's going to try to come back to kind of where it is and retest being oversold here. Just like right here, this was all oversold on the 4 hour and it still dropped. So I would not be surprised if this got oversold again on the 4 hour. Not at all surprised if they tried to drop it here going into earnings. But I'm betting that this is probably about right. You're getting like a buy up, and then this is the middle. It does seem correct. So this is going to end up playing a part in that middle in terms of a cross up. Why is it so far behind earnings? I can't answer that question. But there is a marker there, so it is significant right here. So weirdly enough, it's off in the middle of nowhere. And if you just looked at this by itself without any of this other noise, I don't think we would have concluded, you tell me, I don't think I would have concluded that there was a resistance right here. You guys are like, yeah, I would have. Look, there's the EMA, Booksy. Yeah, go figure, right? How did they do that? I don't know, man. What's cool about the way we do things, even though it's maybe, I know it's long-winded and it's like, well, you did all that to figure out there was a widening so that there's where the gap fill was, but I could just go look at the gap. Okay. Yeah, I mean, that's the easiest way to do it. Well, you did all that to figure out there's a resistance out here in like Magic Land. Yeah. Well, that's true. It looks like it came out of thin air, but we proved that it's probably there. This is the directional motion of the stock, is this widening picture. What's curious to me is always like, okay, and then we go back and we add in something like a moving average, and it's like, oh, well, that would make sense that mathematically that's where the moving average, shouldn't it be in the middle of this structure? By the time we get to here, shouldn't it be in the middle? Yeah, it should. So this doesn't surprise me that that's where it is. But it is interesting, isn't it, that you can do it like manually, like without knowing, without having this little button to click and show you where the 180 moving averages, EMA, exponential moving average, no math involved, purely drawing and lines, you can find the same marker, which is pretty interesting. Maybe I'm a crazy person, but that's not usually coincidence. We see that a lot on here. So there's good news and bad news to this. Maybe a little bit of both. One is I don't really know what to expect here. I would suggest to you that the most common occurrence, and that is on that marker. So we have two trajectories here, and they're both being used. So I was wrong. I said only the one was being used. That initial reaction certainly was used here, and it even went steeper than that. But look at the second one right there. You just got lucky. No, I don't think so. All of these are going to be trajectories from the past, because if you think about, and it's not because there's an infinite amount of trajectories that you can pull, but if you think about like wave formations and like the way that people would be trading this, there would be sort of a self-fulfilling prophecy in some ways about some of these things. So this is interesting. This is just a trajectory. It doesn't mean that it's going to follow it perfectly. But this is one that's very curious to me. From bottom through here, where it kind of peaks and then drops, I find that to be very interesting. This to me looks more like the initial consolidation, and then it's forming into an M top. So weirdly enough, you might include both of them, but I might even ignore that first, because this to me looks like the push up reaction, and then this is sort of the what happens after, right? Which it is. So push up consolidates right around 295, which is kind of near where we are now, and then it goes up into distribution, pump, and then drops down. And then the rest is yet to be said, or the story is yet to be told. But if this ends up being the directional input, it's entirely possible, if not probable, that this gap level here, are going to be used. We already know those are liquidity shelves and stuff here and here, but that makes sense to me. So there would be a transit period. Let me see where that is backwards. It's like this area. There it is. That's where the gap is. So there was this transit period that just didn't ever get traded, which is interesting. That's it. That's all the trading that's ever happened there is like right here in this like week-long period. It's kind of interesting. And likewise, this didn't really trade very long either. It looks like that's what they're kind of using as a resistance right now. So where does the market want to trade? Where is it traded more comfortably? It's traded more comfortably here, but this would be like a base of operations. So it is very similar. The way I drew it, I mean, that doesn't feel like an accident now, because I'm looking at it like that's where you'd want to go up and over this range, but they've already set it up like it was back here. So really, really, really similar. So you try to trade into that area and above this area, but maybe not actually through them, like sideways through them. So this works pretty well. So it's very consistent. It doesn't mean it's going to be exactly the same, but it certainly adds up, doesn't it? Something like that. This looks right. I'm not going to change it. I'm going to leave it as it is. I'm back testing things. I'm trying to go backwards and see if this makes any sense based on like the way it's traded these ranges before. It certainly looks right. That's weird too. That freaks me out sometimes when I see stuff like that. So the way this is traded, there's a lot of frequent dips that are bought up. It is a very volatile ticker, even though it's got pretty high numbers. Maybe not the most volatile in the world, but it's not like Tesla or something, but it's definitely got some pretty big swings. These daily swings are huge on some of these. So the only real question mark that I have is timing. And are we right about that timing, or does it go a little bit further? So I would suggest that after November is probably going to be the best time. Because between now and then, we really don't know if this is going to take a turn to the south. This whole thing changes really very rapidly if it makes a sign of weakness. If it continues down, is what I mean. Then you have to reset the whole thing. How do you know if it's going to do that? Right now, I don't, but I can't say that it can't because it doesn't look like it would because, again, it's going to dip into oversold territory, and I'm very doubtful it's going to stay way down there. This has already had the bigger drop. It doesn't make a lot of sense to do a second one for no reason at this point based on what's going on with this company. I would just have to say, like, it seems a bit unreasonable to just sort of expect that to happen based on everything else. It looks like it's already ready to rebound. So would buying off of or between 240 and 280 probably be lucrative long term? Yeah. The move that most people are going to be wanting, I think, is going to be a bit maybe delayed. I'm not really sure what to expect off of earnings. I don't really expect it to just kind of spike all the way up. Sometimes the middle, let me put it this way, like if this were a perfect S curve, right? You would expect that this would do something like this, right? This would be like halfway, and then you would just expect it to come back up and just pop right after this earnings and go all the way up to like 400 or something. That seems about right. But that's not necessarily the way the market wants to do it. And sometimes we see that it pushes away in order to accumulate lower, longer, and then you got a bigger push later incoming, which also feels very reasonable given the timing on this going into the new year, that this could be more of a January to February type recovery based on this timing. This actually doesn't reach the top till November, but remember how long it was up there? It was up here back in July as well. We didn't do this one. This is really the first place we probably could have done a trajectory since it entered the top range there. I'm just guessing, but I'm betting that's probably farther out in like February or March, because that is what we've seen market wide often is the case. So this is 43.48. 43. Yeah, it's March. Go figure. So that would be another place that I would say, yeah, that seems pretty reasonable. So if you look at the time it took and it's spent in the top, time it took and spent in the bottom, that's another way to do this. I'm doing it a few different ways. So do we count this? I would think we would have to, just by nature of being fair to ourselves. I think we have to count it. So it kind of presumes that you could spend quite a bit of time here, and this goes out to February. That was the first marker we put down anyways. That's kind of interesting. So if it's more or less identical in terms of length, which I don't necessarily think it has to be, but if it is, you could see something like that. I'm not going to flip this chart upside down, but if you did do it, it'd probably be that this would drop low, come up again pretty high, again looking at this same area, September, October, so it'd have a dip here and then it'd come back up, similar wave pattern, maybe more severe, and then it would come back down again before a big motion back to the upside. So similar but slightly different. Maybe you have like a more dramatic move here, and then yeah, I don't know. This would have to be some kind of like rapid fire up thrust. This would be just a more severe version of the same thing. And then you'd have like a spring here off of whatever low this is, because this is like a phase B type bottom. Yeah, pretty much that's what you would expect. And then it would just take off. So is it a good buy on earnings? Well, right now, I think you'd have to do it with the idea that you may have to average down if it has a severe drop. And earnings itself, we don't know. I mean, if it misses, it could send it into a quick tailspin down, especially given the state of the ticker as it is. So, but do I think this is a good play? The answer is yeah. I mean, look, everybody loves the meme stocks. Everybody wants to hear the GameStop stories and all this stuff. But we're talking about 140-cent recovery. When you drop 40% and you recover, it's a big move. So over time, this is a big, big recovery. If I had hundreds of thousands of dollars to throw in the market right now, I'd probably be playing UNH for the long haul. I don't know if I would want to try to test fate and get a big move here. If I have to pick it out and say like, is it going to happen? This isn't that complex. I probably would look at the, again, there's not really any other trends here right now that I can see. I mean, I could look under every single rock here and see if I could find one. The big resistance to me is going to be this middle area, which ends up being where the 180 EMA is. I'm positive like everything else looks as red as RSI, so I'm not going to look at it. What I would probably do is just take a venture at when this breaks out and builds out a bottom. If it's ready to go by earnings, I might take a risk. Even if it drops, I wouldn't be super worried about it. I'm not seeing any gaps. There's one here, but it looks like it was filled because that's where it closed. I'm not seeing anything that looks like a crazy gnarly gap. This is the bottom one, and then this is bottom two right here. Let me go to hourly and check something real quick. There's a really low at 250, but actually it might be more like this one. I can see a resistance and support there. That's where it took off. So 269. There's a little bit of a liquidity shelf because you can tell because there's a high liquidity and then a big drop off on either side. So that's a good place as well. So there's a high liquidity and then it drops off, higher liquidity and it drops off. And it does typically coincide with a bottom or a top if you're going to do it that way. And then let's take a look at the short term. Definitely where it crossed up and over. That's good. It's got a healthy move. That's a really healthy movement. See how it made a really nice push against resistance and then it backs up. Look at the tiny little M in there jumping up and over. That was a really easy to play swing. This is good. You want trades that are like consistent. That's really nice. If we got that every single time on like AMC and GME, it'd be nice, but we don't usually get that nice. So this is really nice. It pushed resistance, backs up a little, makes a higher low, then it does it again and again. There's the little smaller M, and then it's an expansion out and up. And you do get a little bit of a symmetry there. I wouldn't go so far as to say it's 100% symmetrical, but it's a similar region. It's right there, so it hits that top and then goes up again. It's the same level anyways. It was pretty nice. And then I think it did a good job. I'll have to double check this. I'm just eyeballing it. I think it did a pretty job coming up and finding its target. Yeah, right there. So I would have used that drop ledge. This is why I always stress these like final little hooks. They're really important because it's like the last place that it had resistance tends to be pretty significant right there. And then the first place it had support down here, stronger support before that move. And look at where it goes. So it's really, really clean move. If you saw that buy-in and the creek cross, you could have gotten in here with a little bit of risk. But that would have been a really nice play. You trading up 7 or 8%. That's a good move, especially if you have options. So then let's look at that on a little bit of a wider scale, and let's see if we're right about maybe direction. So that's the creek. That's pretty low. This looks like a little bit of an S-curve. It's got a weakness in it already. This was a weakness right here. So it did make lower lows consecutively, failed to break. So it's definitely got that cat ear vibe. And it does that curtain rod drop. You saw this on AMC. It's the same pattern. It just kind of comes over like I always think about fabric laying on a curtain, but that's actually not a bad thing. It looks like it would have a good reaction. And then we can usually do from the gap zone. In this case, it's right there. It does look correct. It comes right off of that mark here. First, you might say, well, that's weird. That's like the middle of the gap. But notice that, look at where that uptrend is right here. Right there. Isn't that interesting? So that's actually right where that intersection is on that other trend. So even though there's no price action there because it's in extended hours, it looks like it should be right around, looks like, we'll just say 320, 360. And then it dropped in. So that's the initial like sell. It dropped in and came back to here. And you can see there's another ledge there. So like the most conservative target probably is this one. And I'm willing to bet that's about a 5% move. I'm willing to bet you, if you look at any of your pundits or whoever, they're probably implying like a 5.2% move. Really, you're that confident in that, Booksy? I am. Because typically what happens is that you get to this place when it comes to earnings where it could go either way, and it's already like pre-measured in the motion of the stock. So this is very, very low. I'm not convinced it's necessarily going to do that. If this is a 50-50 down, it's already hit that mark. So that's a possibility. But we have to look at like where it sank to here and where it dropped. That was at 300, and it went all the way down to 285. This probably gives us a little more evidence that we may be trying to get back to, especially from that top. Geez, that's like perfect. That top and this middle, it gives me a lot of evidence that this is trying to get back down to this marker here, which we marked off earlier. So about 290. So where's it going to go off 290? Well, what goes up comes down unless it's ready to move on. So we still have a range here. The range has been moving upward. We don't want to ignore like the bigger picture here. Like, yeah, that was a SOW here. It pushed through it and then drives the price down. But this hasn't been met yet. So I think this is going to be a possibility. I'm going to get rid of this. There's a little bit of noise. Is there evidence that there's a higher creek here now that wasn't checked? Well, we know this one was tested. What about the next one up? Yeah, this one was not tested. So that's the one that's probably being checked on right now. See how it just broke out and like took off? Pretty straightforward. If these break, you're going to be falling down pretty hard. So right now, I'm going to suggest that, and there's another trajectory here, but I think that's a little off. I don't know. All my trajectories are like slightly off. There we go. That's better. That one's really nice. I like that one a lot. I'm going to suggest that that is kind of done. Well, where's it going to go? The structure here is what I'm talking about. And to me, the structure is basically finished. I don't think there's anything else to do with it. We can keep going on possibilities, but yeah, and there's the second ear here. So it creates 1, 2. So each of these bottoms creates those 2 ears. It's kind of interesting. I always find that fascinating. This does give us maybe be a cause and effect kind of situation where if you did see this as a full S curve, you could make that argument that this is indeed going to drop down lower, which would be likened to a spring because it would be dipping below. Instead of going to 289.60 and jumping up, it would drop below there. It's maybe 286. And then earnings is still a ways off. So, I mean, there's a lot of time. It's like way over here. I wouldn't be surprised if it did come out early and then has like another like drop around earnings instead. Like if it left the pattern here but didn't break out and kind of forms like a sideways area, trades down here in the liquidity that's presented. So both of these may actually be correct, these targets. One just hits now, the other hits later. I don't know. That's more of a guess, but either way, 300 up to about 303 is kind of a wall. And I think that you're more likely going to resist that at first going into earnings. Seems unlikely that it would break above that before earnings. So until that time, my guess is it's going to chop here and then try to test it around earnings. We'll see whether it's up or down at that time. I don't really particularly have any interest in right now until it gets a little bit closer, but it's coming up. And then the reaction, again, depending on where that sits, could be pretty nice. If it breaks, let's just say it goes down. I think it's going to try to hit that first one. I think we're right about that. And then the reaction kind of nestles up. I wouldn't mind it being down into earnings. I think that'd be good. Kind of like push up to here and give it a good go, and then come back, drop into earnings. It'd be quite nice. Might end up signaling a little bit of weakness, but if we're fortunate, we might get something like this that's more or less easy to read. I'm pretty doubtful it's going to look obvious. And then earnings would be like some kind of a, if it's down like this, earnings would probably be some kind of a gap up motion or something. If it beats, you can quick back up and then go. And then you can take that same measure, since that's the unit that's being used right now. You know what this reminds me of? This reminds me of AMC when it, after that big sell down. Speaking of sell down. I hate you, Booksy. Didn't you say it was going to like chop here? Probably. That's what we talked about yesterday. So maybe we see another push, but it already reached the first one. So we'll see. It's still possible. I mean, there could still be another upthrust in here. But for now, I'm just looking at it chopping through here around 3. I'm pretty doubtful it's going to do anything before earnings. But anyways, this reminds me of this bounce here to some degree. Remember this? Now this actually goes lower when it reacted. But it had a similar kind of chopping motion before it dropped through. If it's strong, it won't do that. You won't have that kind of reaction, but it's a similar kind of chopping upward motion. So where does it go from here? From my vantage point, and I need to stop on this one because we can just go forever. From my vantage point, this is going to be, the first stop is right here. Actually, it measures pretty well. I don't know why I didn't see that before, right there. This measurement here, which is that bottom. So this works out to be right around earnings time. Right there. So to simplify this, do something like that. That seems likely. And then the second one, this becomes like a 50-50 of sorts, perhaps to the upside. And indeed, that probably is where you get to your EMA test on the 4-hour. And it looks like you're going to reach maybe the pinnacle over here in a similar time. So back to the top. So it's like the whole of the move anchoring here. This becomes the center. It's weird how that ends up being like the full distance at just the right time. but it is. So that ends up being the middle. So again, is it going to be straight up? No, but you could do something like that, and it would be reasonable to get you back to the top. And then you get into the business of trying to predict if it goes higher, which is a bit tricky. If this is indeed a spring and it kind of settles down and makes a nice dip motion and then breaks out, I think, and you know, I'm guessing as to the nature of this move. I can't know for sure that happens there. I think it's going to go higher. I think it's going to try to make that bigger move. There might even be an already established top here, right there. Again, directionally, like where is the price kind of trying to head? Hard to say, but the final direction on these two bottoms and then the top direction gives us an idea. It's quite simple, actually. It looks like it's just going back up to the 342 triangulation, which makes sense. So that could end up being as high as it goes, 342. It's quite a bit. I mean, that's a big move. There's obviously some time that would have to be baked in there for all these creek crosses. That hasn't happened yet. Things like that. It's about 20%. So maybe not as high as expected, and then we'd have to see what happened after the fact. But it's pretty close to maybe some of our original expectations of where this might go. If you don't like my guesswork in terms of lines, then we can just kind of get rid of those and use a simple, like, hey, somewhere around here it's a bottom. It goes this way. And this seems pretty likely to me that that's probably going to happen. Then timing, I would maybe use like the middle, because I don't particularly like any top or bottom as like a timing indication. This to me probably is the middle right here. So again, I know this one's on the chart, but if you look at top to bottom right there in the first consolidation before when the widening is happening, notice that there's an intro wick down, and then that cuts right through the middle of the kind of the widest portions here. So let me double check that. Yeah. It's pretty dang close. So that's the longer term. I know there's a lot of lines now, but that's the longer term maybe price target. And that's over here in September on the 26th. So the better trade, maybe the safer trade, if you're not trying to catch the biggest move right here, earnings, not knowing exactly what happens, this is probably a much safer trade, which is you could do 350 if you wanted. It's just up to you. But I'll say 342 by October 1st. The reason that would be a bit of a maybe could be a misleading thing, though, is because if you're not careful, you wouldn't want to hold it any longer than you need to. You know, if it peaked early and it hit, let's say it hit like 337, but it had like a 10% move or an 8% move or something, it hit 337. I'm not going to hold it another $2 from here to there, because we don't know how it gets there necessarily. And going up here, it's like, oh, that's great. It's going to go up more. Well, how does it, if it goes that early, like how's it going to get from here to here? It could be like that. Just like it did here. You could have another chop you don't want to hold any kind of an option contract through that, especially. So volatility, obviously, that's just common sense. That's your friend. But I think this would be a pretty safe time frame for earnings play. And again, getting out before the volatility gets ridiculous, and probably just trading it until it hits 330 or 329. Just if it makes a new high and you're just out wherever this is above here. It's pretty rare that if you're going to do an accumulative range, it's pretty rare that it really breaks very far into that gap. Like we had it going up high here, but even if it went up, I would think it'd come right back down. I don't think it's going to go just fill the gap. Couldn't it just do that and like have a bounce and hit here and just go straight up, look-see? Yeah. So if I sell and it goes straight up, I can blame you. Yeah, you can. But it's really more of a matter of like, okay, look, man, they've already established some creeks here. Like they're in the right place. So it would make more sense to me. It's not a matter of like, could it happen? Of course it could happen. It could happen. It just bounces and goes. You know, if it found support right here, it could just go. But it's more about like the principle of, I don't know. So I'm going to look at what's there and suggest that if this wave down breaks out, this is going to do like a 50-50 cross up. Again, it looks right. I think we're right on the money here, guys, because that's correct. Look at that. That's right where the 50% is on that creek. Yeah, I mean, we're in the right ballpark, at least with estimations. But I don't think you can go beyond that. That's all you could really say. Like, it's just there. So now we just say, all right, how would I trade around it? What am I going to do if it goes further? I don't know. You know. And what could happen in between now and then? It could be a lot of noise between now and then. And we're kind of taking a pretty high risk, thinking that, oh, it does just go straight up. Well, who knows, you know? If it took that whole time, it could spend half of that time down bottom here out until August, mid-August. So that's why I think the longer time frame is probably going to be better. I wanted to address Apple again. So I addressed it yesterday, and then it pushed up again. I don't think there's much to this other than just to say it pushed resistance, which is great. So the reason I talked about Apple yesterday is I think this is a really good setup. It has weaknesses. Apple's not like a perfect play here. There's some gap zones that I'm not a particularly big fan of down low. Almost all of these have like gaps from the bottom, and some of them have been filled and some have not. And there's certainly some chances that it comes down pretty low, below 200 again. It's not a bulletproof play. This, to me, could be fairly distributive. I think you should assume that it is right now, as opposed to being accumulative, because it pushed up above the top and it retreated. That's a good sign in some cases if this just has a backup and holds support, but we don't know that yet. Locally, to me, it looks like it's really struggling to hold on to a trend. Now, this trend is kind of weird. I took it right through here. There's a reason I did that. So I was looking at where it was coming from, and I saw that support, and this drop does recover. If this one rejects, and it does so right now, what it's doing is rejecting 1-2 creeks. It's rejecting an uptrend that's below, and it's rejecting that downtrend that it has yet to give above. The next step is more typically going to be a big drop, like a corrective measure. And then again, you look back at like, where does it go? Well, where has there been any kind of a creek zone here? It's probably right through this middle right here. I don't think there's much, again, to say about that other than it's just there, this area right here. And that goes pretty low. I looked at this big picture and I found that there was a really good, almost too good. It's almost, it's like almost embarrassingly good. There's a, why would it be that good? I don't know. There's this wave pattern that's existing here that's extremely consistent. I was counting out the waves and looking at the ups and downs, and basically found that these ups and downs were extremely consistent with each other. So I looked at the up wave, down wave, up wave, That was where I started, and then I broke them down into halves, and then I broke them down into quarters, and I was like, this is very beat for beat. This has an extremely easy to read tempo. It's like up, down, up, down, up, down, up, down. I mean, it's like is not really varying very much, and I think that's always an interesting thing to see. And then what's interesting here also is that this is an up phase, I think, in that wave pattern. And we've already had the downward motion here. So I'm looking at this as an upward motion. The last time I had an upward motion, there was a double top end, just like there's a double top end on a downward motion, all the same. So what comes between them is typically like some kind of a drop in between that goes back to check certain liquidity levels. Based on what we saw last time, I was suggesting, well, it could come down as low as like 200. Again, that makes sense, this pocket right here, because there is a creek. And it's very similar to the previous one in the way that it's traveling because of where these things had set up previous markers. So I was like, yeah, that makes sense. It could come dip down as low as like 203. But it may be a lot stronger if this were to stay mildly above. So even though this looks kind of distributive, if this creates a wave back up by not dipping below 205 severely, but just kind of pressing up against that, this could turn into an Elliott wave situation where this is a 1-2 build out with a 3, and then you have a 4-5. And 4 would usually be longer, so that kind of begs the question, like, couldn't your timing all be completely wrong and this and that and the other? Yes and no. Based on the way this is set up, again, it's got macro and micro timing to some degree. I don't have the big picture timing on here, but I did look at the big picture waves, and there's some pretty clear evidence to me that the intersection that might be in view here is down here at 184. That to me seems like a very likely place, if it ever has another big drop, that it's going to come back to, because long term there's these blue uptrends that you see, and long term they're again very consistent, and we haven't yet established a double bottom on this one. Now, that doesn't mean it has to be now, but there's very little times where it's not checked at least twice. I can't find a single one of these that wasn't checked at least twice at some point in the future. Could be a long time from now. Could be way up here at 216. Doesn't have to be now. But then I'm looking at this widening, and I'm like, there's a lot of resistance overhead, and we've finally like broken back up into this resistance, and we're doing so at this particular angle on Apple that's been used again repeatedly. This is like a long-term behavior. This is the same buy-up angle repeatedly here on all of these major pushes up. 1, 2, 3, 4. And it's not inconsistent to say that it's being used now, because it is. It's the exact same angle. I looked at it, I copied and pasted, and it's right on the bottom here. It's right on the bottom. That doesn't mean it couldn't break through it like it did over here. You see how it has this consolidation motion? This is what I think we might experience to some degree. Okay? Remember when we were doing the bit on S&P 500, and we noticed that when it came back up, and I don't necessarily have it on the chart anymore, but when it came back up, it actually hit certain levels in the same order. Like the motion here of up down to sort of like, where did it come back to? Like if you look at that red, that's where we were. And if you look at where it comes back to when it finds support and takes off, it's the same area, right? So it's almost like a repeat, and I was saying that before. It's like a repeat of the exact same levels. Even here, like this being hit is the same exact place you hit here. So I thought that was very curious. Like, all right, so the market's just repeating April 2024 through February 2025. That's exactly what happened. Almost all the way to the top, it did the same thing. The only place it deviated a little bit was here at like 574, because it hit that early, and then it doesn't have the double tap back, which I had at one point suggested that might be the case since it already tapped it. It may not come back down to it, and it didn't. So the idea of it going up like this didn't really cause me to like flinch. It was more just like, well, it did hit this on the way up. We talked about that. So maybe it doesn't have a big deep backup, but it did back up. and then it pops up again and doing this kind of double top extension motion in much the same way, albeit now we don't have like some kind of crazy divergence. Though looking at it now today, I'm like, yeah, it looks ready to go. It finally hit that peak here, and we'll see. NVIDIA has been really driving a lot of this motion, so we'll see what happens. Anyways, that theory, that idea of like retracing your steps from this time period, that didn't happen on some of these tickers. There were two in particular that I thought were very curious, and I marked them on the stream here. One is Google, and the other was, I'm going to save this real quick. The other was Apple. So Google, which, parent company is Alphabet, GOOG. This is curious to me because it has not, again, recovered back to all-time highs yet. And when you go back and you look at where those regions where we were just talking about, we were talking about like, what was it, like April 2024, right here, this area. There's a lot of similarity. This is indeed, if you look at it that way, it's like, yeah, it's kind of the same, but the difference is what? This is like a widening. Okay? The other difference is, of course, it's lagging behind. It's like behind the market. Google looks particularly good to me right now. I don't know if it's going to do some kind of crazy breakout motion, but if this is the middle of an S-curve, which does seem possible to me, yeah, you might have a little bit more sideways here, but this looks very, very strong and consistent. This is the same motion upward every time, like the same directional motion every time, which would suggest that by October, you'd be 230 all-time highs pretty easily. How does it get there? Look at the past. Once this has made a bottom, this happened right here. It happened 3 times. It's like, this is that bottoming motion. It goes up into like a double top. At least twice here. I'm sorry, I said 3, but same thing. Goes up into like a double top motion. Well, where is that at right now on Google? I mean, it just made that bottom again, and now we're kind of right there. So you tell me, what's next? Is it really going to be like a rinse repeat? I don't know. I don't know if it's going to be 1-to-1, but I can tell you that it looks fairly consistent, just like what we were saying on SPY to some degree, that there's this repetition of pattern. Granted, one could argue that, well, if that's the case, then we're overdue for like a big dip, right? Because you would have this kind of massive push up, you come back down. I know. But I think what I'm trying to get across is that the levels that are being met are very much like the same, right? The same or similar. Maybe there's a sense in which we could take that a step further and say, I don't know, use this as like an example, like say that's the marker that we're going to use and have an actual, almost like a fib fan. We could do a literal fib fan, or we could just kind of doodle it here. That looks right. To see that top, and the breakouts, it looks pretty close. That would suggest that we're on the right path here, that you could have a consolidation for a time without losing all the momentum, and come back above in some kind of a macro breakout motion and still get to that peak and have a really strong late August, September showing. Again, rate cuts being on the table in September puts this in a very interesting spotlight, like a possibility. Or this gaps up, and then there's confirmation in rate cuts. If this ends up having some kind of bullish move to 200, maybe that's not a gap fill, right? Maybe it gets pretty close, and then you get a backup period into September, and then rate cuts are announced, and you get a final push. There's a couple different ways to get to sort of the same end. What makes you think it has to do that, Booksy? I don't think anything has to happen in the market. That's a really bad way to look at it. But like long term, there's nothing really wrong with Google's chart, and with its business. It's got some problems here and there with like litigation and stuff. You see these come up every now and then. on, your feeds. Somebody's suing them or whatever, but it's all kind of like drops in the bucket. I don't see it as a big problem. This to me is kind of the big reason right here that I think about long term, like why this is probable, because I don't think this trend is lost. And if you look at where the top of that trend is, it's pretty clear it's like right in that same pocket. So I don't have a whole lot of else to say about Google other than if it's recovering, it's probably going to hit all-time highs, which is an obvious no-brainer. But also, like, downside here doesn't look super dramatic. If it drops to 158, it drops to 158. If it goes back to hit the lows, it goes back to hit the lows. I think it's a bit of a dangerous play into October. I don't know if I'd ever want to play the tail end of a move like that. I think I would always suggest you look outward. But I do think February, again, March, this is a good one. It's behind the market. It has not moved ahead, which is good, I think. Yeah, thanks. I appreciate it, John. I appreciate that. Do I think UNH could be entered in January 2026? Yeah. I mean, you can wait. I don't think it's going to take that long. I think the back half of 2025 here is going to have a little bit of ups and downs, especially going around October into November maybe. But I actually think that by November, so if I had to describe it, I would say, and I might get this kind of backwards a little bit, I would say that end of July, August is going to be a mixed bag, which doesn't really help you because there are some tickers that look like they're ready for upside, some tickers that are really ready for down. But I think that's important to recognize as the same thing. I think that some tickers need the liquidity. Like they need to go down into like a spring for the rallies that come in later in the year, whereas others already have enough momentum to keep going. And I've been comparing it to the COVID drop because, again, there's a lot of similarity. There's a lot of similarity in terms of which ones are seeming to do a lot better and which ones are just kind of going. Like, this ultimately just went straight up. Well, yes and no. What is this? Well, these are massive corrective measures, right? But while this is happening, remember this is September 2020. And while this is happening, this is where AMC and some others, not just AMC, a lot of them, are going down for like a spring. They're delayed action. And it looks like they're not going to go anywhere, right? So what's the difference? Well, again, some are like already at their all-time highs and they're basically just chopping. Do they still have extensive chop? Yes, they do. So I'm looking at August as this kind of a period. I think what we're going to see is, and this is just in my opinion about the timing, and this is a tough one. I think August, you're going to have some that are kind of breaking up and getting to their peaks. And then September, October, probably going to be a bit of a mixed bag. And again, but I think you're talking about sort of the same thing where some of them are already up and they're breaking out and the market looks really strong. This is when I expect early September, I expect there to be a lot of springs, especially if the cuts are announced. The only way that changes is if there's like a surprise rate cut announcement, in which case it could accelerate the timetable. That's in like 2 weeks or something. That's not likely going to happen. I think it's very unlikely that it's going to happen. In my opinion, it's going to be September after the summer. Inflation, that data was just released. Inflation did go up. It did rise month over month. It was expected. It met expectations, but it still went up. So it's important to know, yes, met expectations. The market wasn't surprised by it, but inflation did rise. As it was kind of expected to. So I'm thinking that, again, they're using summer to collect data, which they've already said. I'm not really have to invent that. They already said that. He said as much months ago, but that ultimately, like, that's going to build out, into these rate cuts going into September. And that's where I think you get that kind of takeoff. So I'm thinking that, again, August, so end of July, August into early September, it's probably going to be a lot of this. Like a little bit of uncertainty, but a whole lot of chop. Some are going to be near all-time highs. Some are going to be dumping into springs. And I think by September, I think you're going to have this kind of like push. And I do think you're going to get like if there's a rate cut, it starts happening again, I think you're going to get a Santa rally. And I don't think it's going to last past March. I think it'll be a really bullish couple of months going March into maybe into March of 2026. March has come up a lot as pivot points. So my expectation is March is going to be sort of a pivoting time, an end for like a bigger move. That's a ways off. It's not like right next door, but I think wherever you're intending to be at that time, that's where you're going to be. Google could be at 300 for all we know. We don't know, you know. I don't think it's going to last, and I think that 2026 is going to be kind of like our 2022 year. That's my opinion. So I think it's going to set up a new top range here. I think whatever was, you know, kind of brought about by this particular range is more than likely what 2026 is going to show us. It's like just more sideways. That's my opinion. All right. That doesn't mean it's going to be the same for every ticker. So do I think it's worth waiting until January to buy something or whatever? Probably not, but it's going to be tumultuous. You know, if this hits in October or going September and October, if this hits these new all-time highs, is it going to just sit there? Probably not. You know, you're probably going to have some pretty serious chop here, some pretty macro drop motions here going into, you know, December. Like it's very likely going to have some pretty significant shakeouts because it has to at this point. And that's a breakout motion, but it's like, that's good, right? And then you break out, and Google especially, I mean, looking at this as a widening, if it breaks to the upside, it's going to be bullish as all get out, right? So we might have again, a really good, some might have a really good September. Some may be a little shaky going down into a spring, but I think you're going to get those big motions and then chill out quite a bit into December. You know, is this verifiable by anything else other than opinion? It's timing, man. And I've found that the wave pattern timing for most of these things has been fairly consistent. If they're going to make these upside moves, almost exclusively, it's all been February and March of next year. It's been that way for a long time. None of this means you couldn't have another downside push, and that's what we're saying on Apple. It's like technically it could come down again. You know, again, this is like the difference between like a spring into this time period versus like an SOS. I don't see it as that different. Like waveform wise, this could very much like accomplish the exact same thing where you're going down into like a spring and then you end up with this kind of a massive move off the middle. Same time of the year, you know, different position, but so I think some of these are in a position where they're more likely going to go down and go to that spring motion. I think others, you're more likely to see it be that chopping high, getting ready to take off. But in both cases, all cases, I think it's very likely that rally is going to happen then. So that's why for AMC, and I've been saying it for a while, I don't think that's anything new, that it's likely going to be down into August. We're not in August yet, guys, but we've come down. You know, we started talking about that a while back, and we were talking about when this thing was finally going to leave. It's always, I mean, except for like this, there was a small window of time where I thought it might be in June, July. Most of the time I've been fairly consistent about this, at least, that it's been like August, September, because of that cycle and other reasons. The timing of it was built out back here on this peak. And it suggested that you're more than likely going to be down into this time period in earnings, which is in August. So when we talk about that, I don't see this as disconnected from like a Google just because Google's up here. I just look back at COVID and I'm like, it was the same exact thing back then. Some tickers were going into real low springs They were all-time lows. They all ran quite a bit. That's why there were so many meme stocks on people's meme stock list, because all these tickers had run like a bajillion percent, right? It wasn't just two stocks in the market. It was there were a ton of meme stocks that ran after COVID. So I'm of the opinion that if you wait a little bit and you're heavy into the end of the year in investing, you're probably going to do pretty well. But there will be some that front run. Your main guys like Nvidia are already topping all-time highs and beyond, and some are a little lagging. I like the lagging. I like that Google's a little behind. Why should Google be behind? I don't know, but it is. In a year from now, am I going to regret it if I invest? Well, maybe it'll be back to where it is a year from now, but if I have that motion up in the meantime, I want to catch it. I don't see this as like a long-term problem. Like, this looks like a really good buy. That's why I'm talking about it today. That's why I went to UNH today, and I went to Apple and I went to Google, which are not normally the ones I talk about. These are market behemoths. Some are more likely than others to have big runs sooner than later, but these are big tickers that are lagging behind right now, that got hit hard for one reason or another. Apple's a difficult one, but I'm thinking out loud when I say that I genuinely think it's getting way more bad press than it actually deserves, and it's getting to a point where it's so bad that I think if they just if they do anything, like, it's going to be perceived as just this huge boost, which just blows my mind, because I'm like, it's sitting on a place where it's still down like 18% or something on the year. It's like, yeah, it could go down, sure, but the press is so bad, and there's so many people shorting it, like, thinking that it's bad, and I'm like, it's just going to be like a drop of a pin, and it's going to go flying. You can't prove this kind of stuff till it happens, you know. I will say, though, that this isn't exactly... We talk about these things. This isn't exactly like way out there either. You know, when I was talking about this motion here, that we're not talking about a move straight up to 300 overnight. We're talking about a move to 300 by February, you know. So it's expensive. You try to buy options for stuff like that, it's really expensive. It's definitely a way to kind of block out in some ways. I mean, it's just the price. Options are just based on the price of the ticker. It's not personal, but it's in some ways it does block out a lot of retail trade, because there's no way to trade unless you've got like I was looking at like some contracts for Tesla for next year, and they were, gosh, I don't remember what the number was. It was like $20 a piece. I was like, goodness gracious. That's expensive. You know, you're $2,000 for at least one contract. It's like, yeah, you better really believe in that move, you know. I'm willing to lose 2,000. Will it be worth it? It might be, but you have to, you know, long term, you'd have to plan for that. It's a lot of money to invest in something. Some people, they're like, that's nothing, dude. I invest $2,000 overnight all the time. Great. I think that's the goal for everybody. Like, I'm not disparaging you. If you can do that, that's awesome. That's not something I'm able to do. So I would do it if I could. And really, I think that is a lot of times the goal for people, is you work on those higher numbers, just math. But this is typically like happened, I don't know, 1, 2, 3, 4 times that recovery. I mean, to me, this just looks like a double M recovery. Like, it's a drip down 1, 2. It looks like a low to me. I would genuinely not be surprised if it comes back up and hits this top blue line at like 450 or something in the future. It doesn't have to. It could stop short of that, distribute along 270s or something, but it would not surprise me if this is like a wave dynamic here. And I think I did this on Apple before, but there's a real possibility here that this is like an up down up kind of wave going back to 2020, that time period. Yeah. This would suggest that you're probably out of this area, just timing, basic timing, by November. Well, there it is, right? Oh, it's a Santa rally. That's where you've got it breaking out here. Yep. I mean, it took like 3 seconds to do that and just kind of show that this isn't complete and total nonsense. The trade itself, though, is a trickier one, right? You have to kind of figure out where you're going to put your money and when. But like all of this to me is like relevant, you know. So I have, I've got opinions about other things, but I think that this is a really strong, potentially like a really strong trade. Historically, this hasn't moved in these significant bursts that often. The last time it did this was after COVID. It was a pretty massive move. This would be the same. Yeah, it's the same distance. Back up to like 400. Well, like I said, I would not at all be surprised if this comes up to like near 400 by around that time. Like, just would not faze me at all. I think maybe more realistically, you could say like the 330s or something like that. That might be more realistic, but yeah, so you're talking about $130 from upside here potentially if it continues at what it normally has done. If it ends up going back to 190, that's a big gain. It's not as big as some of the others. It's 70%, but that's a big gain still. So I guess we can finish the day. How do I try to have my portfolio 25% cash on hand? I've changed that this year. I used to do very little liquid, but I found that that's not really been very helpful. So my rule of thumb is mostly just, which is kind of like a no-brainer, I know, but my rule of thumb is I try not to invest more than 10% in any one thing at one time, which is still pretty high. I mean, if you can lose 10% of your portfolio, that could be quite a lot of money depending on where you stand. But I need to set that limit for myself. And then in general, I like to have about as much cash on hand as I have options in play. So if I had like $1,000 in options in play, I'd want to have about $1,000 in cash. Where did that number come from? I have no idea. I don't remember why I did that. But I just found that like the need and the to kind of like maneuver, I just needed to have the extra capital. And then also like making sure that I had, again, opportunity. So it's not always about rolling options or something like that, but really it's also just opportunity to like find, hey, I found another play that looks really good. Does it always work out that way? No. But you know, liquid is liquid. It's more about, what I mean by that is to say like, you have to know what's right in terms of liquidity for yourself. Liquidity means more than just investing. It also means personally, financially, what are you going to be able to take on the drop of a dime if you have an emergency for your family or whatever. That's a financial advisor question. I can't really answer that, but it depends on you, right? If I need to be able to access my money because there's let's say I have a family member that has it's prone to like seizures and we were going to the hospital all the time or something like that because it's gotten worse. I may need to have more cash on hand, to do co-pays and junk than somebody who's just needing to have like a, kind of a stagnant emergency fund. And then there's tax things. You have to think about that. What are you willing to take out? I actually have been taking out an income. So I always make sure I have a certain amount per month or per week, roughly, to take out. That's actually helped me a lot. What it means is that it looks like my portfolio is not growing that much, but in truth, it is growing. It's just that I'm always taking a percentage out, and that's just to pay bills and junk. That's just how life has to be for me right now. So if I said like, hey, you're always going to have a certain amount of cash, A, that would be a personal preference. It doesn't necessarily fit you, but B, it doesn't really take into consideration like, what are you doing with that cash? Like, it's just that's a big question. So what are you doing with it, you know? Do you need to pay bills? You're probably going to want to set aside a certain amount that you just don't invest every week or two so that you have that to pay bills. It's just a basic life question. If you're asking if it's just like as a trading tactic, like should you have X amount of cash on hand? Like I said, I think that if you're going to trade options, you should probably have more cash on hand. It's just the nature of it. If you're trading shares, I'm not sure it matters that much. I haven't really found very many times where I've needed cash urgently for anything with shares. Again, just the way that liquid moves with shares tends to be slower. And with options, I like to be in and out of the play if I can, as quickly as I possibly can. And if it takes longer, then I think I'm usually not in a good spot. If it's taking more than a couple weeks, it's usually not good for me. So that's the way I've been trading. But I have no problem saying that like this is both a good short-term and long-term trade, but it kind of depends on your entry. And right now, like if you were entered to the upside, this drop could potentially crush your options. I mean, even if it doesn't go that far, it may not be the best trade, you know? So it's very beneficial to just kind of wait it out. This is Apple, and see if this happens. Long term, it's not a very unsafe trade in my opinion. Like long term, if you're at like March or something, you're probably fine, no matter what happens here. Short term, I don't know. There are a lot of big question marks here. So having cash at the opportune time is another question. Like, I want to be able to invest in this come September or something, then I need to make sure I have enough cash in September. I didn't really talk about AMC today. I don't feel the need to. I think yesterday we kind of described the possibility that this went up again, but really just talked about a iterative motion here. Like we should get a secondary and then another one even. This may already be done, so I'm not sure that it's not going to go up again. I really almost don't care. It sounds bad. If this is a backup, it could be similar to what happened here where you get a pretty deep backup and you still could get another push that goes to like 350, but ultimately I'm looking for that cat ear, guys. I'm looking for that repetition of upward motion. And unless there's like a really big change of character where this repetition of motion turns into breakout motions like this, that's a different story, you know? And we could be in a very different situation if that happens. My gut is telling me it's going to be more or less sideways. We're probably going to hold up pretty well around 3 until earnings, because I'm of the opinion right now that repetition isn't going to just slide us off a cliff based on the way this set up here. It's set up fairly regular, and I think that the next one would be down to like 3, which just seems like it's happening. So if it's already happening, then there's no more upthrust, there's no more continuation. right now, it's fine. This is very much in line with what I called out. I said 330, 331 to 333. It went a bit higher. I'm not particularly concerned about that. That's all there is to it. I just don't see a lot to talk about. And then GME, it's sort of the same thing. This is a weird range, and it's a range. And I knew that when we were coming down, it probably would bounce out here, and it did. And I had it coming up to about, I had two markers. One was at 2350. The other was right here at 2385. I think it extended above both of those just slightly. But now it's retreating again, and that makes sense. So we thought that this would be like an up wave and then a down wave. And it looks like that's true. This is the downward wave. I don't know for a fact it's not going to break out again. It could go up here, could stay flat. Almost doesn't matter at this point, because if it goes up again, it's not going to disprove anything. It's just going to say, well, we have to see where it goes. It doesn't make a higher high, stays at like 2370, then that suggests it's coming back down into the end of July. And that makes, timing-wise, is pretty straightforward here, because this is like the middle of the middle. So this should be the center of the cat ear mark, which is where you get like a rounding. So if this is a bottom, this should be like the middle of the bottom right here. Again, which direction is it going? That's the only real question here, right? Is like, where is it going to end up once that bottom is done? Yeah, I could make an argument for a dozen different ways that could happen. But the easiest way to do that is just to look at projection-wise, like where is it heading right now, and then where is it held supports and where is it not held supports? Like, surely this is possible, but if it doesn't break the support or the resistance here, it's not happening. So it makes it very simple. It's going to just come back down. These are already baked in. These price targets down here around 2210 are already there. So in order to get there, you would have to go through and make a weakness and then dive for a spring of some kind. That would have to happen. That's how I fill in the gaps here and what I think what may happen. And then I just look at the liquidity levels, like where is that likely going to take place? Like I had this on the chart right here going up to 2310 and being like a breakdown before any of this had formed out, because when we came in, we anchored ourselves around that level and we clearly had driven through it, which tells me that this might be used as a sort of a 50-50 marker, which is how I did some of that reactionary motion. Like it swings back around. Is it a perfect answer? No, but it's pretty darn close, you know. This defines your range. So then when you come back down, how do you get from A to B? First, you build resistance off the top. If you're going to have a middle here, this is going to be like a UTAD. You might even push right here if it's going to be bullish later. Before you go into a spring, you may push this resistance again. You may show strength right here on a UTAD, like it comes back above the top of the range locally, this guy, but it pushes against the creek. And then when you go down, there's usually like a rebound off the floor with a weakness before you drop through. None of that has to happen exactly that way, but have they already set up a creek? Yeah. Did they jump the creek? Yeah. This is exactly where you find the typical M cross happens to come back down and lay back on top of it, if it's going to do that. The only other option is it holds here high and then breaks out and up, in which case you've got a level around 2380 that could be tested, another one around 2429. It's pretty straightforward. So the wave formations here are very simple to read, thankfully. And they've already given us a lot of information, so that also makes it very easy to interpret, right? I just don't find this to be a particularly interesting one to watch every day right now, because to me it's like this is just in the middle of a workout kind of period, and it might take another week or so. Look kind of boring. The only thing that would change my mind about this, and I'll tell you guys right now, in case, and I know this is like just a catch-all, but the only thing that would change my mind is if this went into like a really fast distributive action. If it popped up and dropped down really hard, really quick, I would be watching it very, very carefully if it did something like that. Because if that happened, you might be in a situation where you're going to do a really rapid, well, there's no real telling because this still could be a phase B, I guess. But it's more likely that you're then in a situation where you're going to actually recover high and then like take off. That's a very different setup. That's not one that we typically see, but that's like a really hyper bullish setup. And if I saw something like that and it dipped low, rapid fire, and kind of tipped the scales, it doesn't have to go super, super low, but if it hit that gap especially and then made a higher high and pushed up, I'd be like, yeah, all right, that's a change. Let's move with that. Otherwise, this timing's not, it feels very set in stone to me right now. Like there's a very clear pattern here of timing. I mean, it looks not clear to you if you just stare at this chart. It looks like a hot mess, but it seems pretty clear to me that the timing here is fairly straightforward. So, yeah. So right now we're up, we're back down. We should go up again and then back down again before the end. And that's just going to be like a simple wave. So we're kind of in a downward phase that might go back up. If we were going to buy, just to buy, you're technically in a downward motion right now. You could come back up again, but I don't necessarily think it's going to break out. So, and I think the same goes for AMC. It's in like a downward motion. It may come back up again, but I don't necessarily think it's going to break out just because it comes up a little bit. You know, this looks like into Friday. You may rise. If this rose into Friday, it'd be like here. It doesn't really mean anything because that ultimately could be like a breakdown on the trend, which I don't think has happened yet, which is a good news for you if you're looking at this like, I don't think that's going to happen. Well, that makes sense that's where that would be. And then maybe again, potential to come up again, still there. Again, doesn't mean it's going to necessarily go to the moon. I still think it's very possible it comes right back down. But either of these would make perfect sense to me. I wouldn't have any kind of big questions about it. I'd just be like, all right. Yeah, for the most part. I think when you look at some of these guys that were already running, I didn't look at NVIDIA or anything like that, but I think they've already kind of worn out their upside for the moment. Part of it's probably just inflation data. The market has to digest it. I think everybody knew it would be a little higher. In my opinion, it's a bit of a just like a not a fabricated sell-off, but like a good reason to sell off, if that makes sense. Like, all right, how long is this going to last? Okay, now we've got inflation data that shows inflation is indeed rising month over month. You know, maybe it's a good time to like take some profit, shake some people out. And I don't know. We talked about S&P 500. I wish I had played it better because I had this idea that it was going to come back down. And so I said I thought it would come up again and then sort of be like the last hurrah. It probably would break out here or break down here. And it did. This has ended up being pretty close. But it reached highs like 3 times and now it's dropped. Do I think it keeps going down? Probably. At this point, it's lost, or it may have lost. I can't really tell. Looks like it may have lost that up and down. Well, this is a weird looking chart. Yeah, I'd say that's a distributive candle, but it needed to come down. probably going to come back to 615. That's my opinion. And we could have some sideways, before that officially comes all the way down. Who knows? It doesn't have to be Friday. The market may prop it up into the end of the week here. So I wouldn't hold my breath. But it's certainly ready. I think it's ready to have a pullback period. CMBM went to near 80 cents today. Where did we get it wrong? What did we miss? I don't know. I mean, I didn't trade it. So for me, it's not really a loss if I don't trade something. It's just not something I want to, I don't know. If I got it wrong, I got it wrong, But if I didn't trade it and I got it wrong, then so be it. Doesn't look wrong. Where did we get it wrong? Order of operations, I suppose. So I thought it was going to come down first and then maybe go up first and then maybe down. And it looks like it retraced first. So it held a higher high. That's where it changed character right here. And then I can't really tell why this rebound is where it is. Because I don't really remember when we charted it. It looks like we charted it here, and I said it might hit and then go back up. And it did. It went back to 40 cents, so it went back to that blue mark. The second target on there was this guy at 45 cents, which is where it goes later when it comes up the second time. So our targets were right. We got two targets right. This is where I suppose if anything was to be wrong, it would be here. So we knew that when it came up, it would come back down. And then what I looked at was the likelihood that it wasn't going to hold strong and it was going to come back down soon. So the idea was that it would come back down and potentially make a lower low. So this would be logical if it had immediately sold back down, thinking that this was maybe a little weaker. It held up pretty high and then it gets this big gap down. I mean, it looks like it's going to do the drop. It goes from, like 30, 39 down to 32 here in one fell swoop in 1 4-hour period, basically. So it's there, but then what happens is it doesn't make a lower low. So where did this change direction? Right there. I mean, that's all there is to it. Here. So back on the 24th of June, which is a while ago now, it broke out and then it consolidates for a really long time to the end of July, to the beginning of July. So yeah, this is a big deal though. It made a higher high or a higher low after advancing. Higher low. So it makes a higher high and then it makes a higher low. This is the kind of M cross that typically is bullish as long as it then holds up here and it provides support off the top, and it did. I don't know if I looked at it and thinking that this was distributive later. I don't remember ever coming back to it. But then you just kind of look at where those targets are. This would have been the one I would have looked at, probably. Though I don't know if I would have moved it at all. That's probably the one. And then here. So it looks like it went to pretty adequate, like 50-50 around that ledge. right across the middle there. So is it still going to go up? I don't know if I'd say that, but maybe. You never know. Maybe you could hit $1 or 99 cents. To me, it's probably done. I mean, that's just me, though. I don't really know what else to look at right now, right this second. Without going into high detail. So, yeah, it seems to me like that's the new norm right here. So if it comes back down, you're looking at this liquidity shelf around 45 cents. It's just made a higher low instead of a lower low. So it was bullish. All right. And most people left with that. That's how it goes. End of the day. Yeah, thanks for hanging out with me. I know we looked at some different stuff today, but I think it's sometimes necessary just to get your mind off of things, chart something else. And just remember there's other opportunities in the market. It's not all, AMC, GME kind of stuff all the time. So there's some good opportunities out there. You just got to position yourself right. Long term is really what we're talking about today. There wasn't a lot to talk about super short term. UNH just has an earnings coming up, so it might get a nice reaction here. But other than that, there's not much else, I think, until about August, a couple weeks out. So maybe a slow couple of weeks. I'll try to be on and off regularly, though. Check in every now and then. So anywho, appreciate you guys, and I hope we catch up with you later.